Time for Money Power Politics and some surprise new developments this morning on the ongoing trade war between the United States and China. Just hours after President Trump announced on Twitter he will hold an extended meeting with Chinese President Xi Jinping at the G20 in Japan next week, he said this.
We're either going to have a good deal and a fair deal, or we're not going to have a deal at all, and that's okay too.
Joining the conversation, Axios chief financial correspondent Felix Salmon and Politico chief economic correspondent and host of Politico's Money podcast, Ben White. Ben, your reaction to what the president said. He creates drama. When he said he was having that meeting with Xi Jinping, the market shot up.
It did, right, because Wall Street obviously wants to see a deal with China, not see 25% tariffs on everything the U.S. imports from China. And then, of course, he says it's okay if we don't have a deal. So he's kind of, talking out of both sides of his mouth here. I think he wants to tell his supporters at rallies that if he doesn't get this deal, not to freak out, because he's eventually going to reshore all of the manufacturing that moved offshore to China, something, of course, he can't do and is impossible to do and will never happen. But he wants his supporters to believe that. But Wall Street very much needs a deal. I think he needs a deal, too, because he doesn't want a giant sell-off in markets as he's heading into re-election.
Okay, that'll never happen. But 6 months ago, we said we'll never, ever see a rate cut. How would we with a booming economy and low unemployment? And in just a few hours from now, Jay Powell may do just that.
It's unlikely, but expect one this year, or maybe even two. The economy looks like it's a little bit running out of steam, and there's a lot of pressure on him to do what's known as an insurance cut. Not like start a whole rate-cutting cycle, but just cut rates a little bit because the inflation isn't there and he has room to do it, and it might keep the economy growing for a little bit longer.
The LA Times has an article titled, "A devastating analysis of the tax cuts shows it has done virtually no economic good."
Right. And the tariffs have increased prices way more than the tax cuts increased income.
Yeah,
so
essentially
consumers
wiped
are
out
worse off.
the benefit of the tax cut.
But is it premature to say that the tax cuts happened just a year ago?
Sure.
You're not going to get booming growth in 6 months.
Right. Well, what they promised us with the tax cut was that they would increase capital expenditures. The companies would take their lower tax rate and faster depreciation and pour a bunch of money into new equipment, new workers, stuff that would boost the economy. That hasn't really happened yet. The White House tells us and promises us that it will happen eventually. More of it will happen, and we'll get the sustained 3% economic growth year after year. Nothing in the data shows that yet. But you're right that you can't judge a 10-year tax cut on the first 2 years. But if you look at the data we have now, it has essentially put more money in the pockets of very wealthy people and corporations and done a lot of buybacks and dividends, has not boosted productivity, has not boosted investment. So it's not paying off yet, but give it a little time.
But just think about this. Corporate America loves that tax cut. So the president's got them. The tariffs aren't completely put in place. There's lots of threats and talk about it. And a lot of people in the manufacturing community are saying, well, the president is trying. And if, in fact, we get a rate cut, or at the very least, rates don't go up, that's a win for Wall Street. So while we can talk about this buffoonery, the silliness, Larry Kudlow doesn't even like it, could this be mastermind winning?
Well, the stock market
in the short term.
The stock market is at an all-time high right now, so something is going right. Quite what's going right is not entirely clear, but you're right. There is a certain amount of optimism about the tax cuts and an optimism about the Fed. If the Fed comes through with a promise of future rate cuts, corporate America is going to like things, but they ultimately hate the idea of tariffs, and tariffs could, put the kibosh on everything.
It's not just rich Wall Street investors who own the market. It's pension funds, it's 401ks, so people care about it.
They do.
Are Democrats going to look at this and think, if we push further to the left, this is going to help the Trump narrative? Stan Druckenmiller a week ago, who said nothing good about Trump, but said, if Bernie Sanders is elected, the market goes down 30%.
Yeah. Well, they said that about Trump as well.
Right.
That's a good point.
And it's certainly the Biden case is, we don't want to go radical on taxes. We don't want to boost taxes on everybody. He said that at a fundraiser on Wall Street last night. Exposing him to some criticism from the left. But let's also point out that the Dow is exactly where it was 18 months ago. So it's at an all-time high, but it's been near that all-time high for nearly a year and a half because everybody's freaked out about the tariffs and trade wars.
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me or click over on this list to see lots of other great videos.